How to lock in a 0% capital gain tax rate as a founder. What if I told you that when you sold your company, that most would owe upwards of 23.8% income tax on the sale? Ouch. What if I had a way to help you avoid paying capital gains tax on all of your company stock? So imagine with me for a moment. You're a successful founder of a startup company, and 5 years after you've been grinding your face off to build this company, a private equity firm makes you an offer that you can't refuse to sell your company. Now, you're possibly looking at a check of $10 million, and that's for your share of the company. So you call up your accountant, and he tells you some bad news. He says the IRS will take 23.8% of your sale, and you'll need to give them $2.38 million for taxes. Yikes. But then you call me up, and I tell you, don't worry about it, because we set your company up in a very specific way where you don't owe the IRS anything because the first $10 million of capital gains is excluded. What? You say. I'm going to give you a hug, and I'm going to buy you a Porsche GT3, which, by the way, is my dream car. Okay, maybe I'm dreaming here. Sounds amazing, right? Well, stay to the end of this video, and I'll explain the surprising trick that I use with our clients to make this all happen. Hey there, my name is Eric Neum. I support a network of nonprofits and orphanages by helping cryptocurrency and cannabis entrepreneurs with their accounting and tax. I've been working with high-growth business owners just like you for the past 13 years as their CFO and tax advisor, and I've seen a thing or two. On January 24th, 1963, John F. Kennedy quotes, "The tax on capital gains directly affects investment decisions, the mobility and flow of risk capital from static to more dynamic situations, the ease or difficulty experienced by new ventures in obtaining capital, and thereby the strength and potential for growth in the economy." Exactly 30 years later, in 1993, Congress wanted to incentivize small business investment, and the IRS introduced a tax exemption as part of their Revenue Reconciliation Act. Now, more commonly called Section 1202, this provides a 100% capital gain exclusion on the sale of qualified small business stock, or QSBS, held for 5 years at least, with a savings of up to the greater of $10 million or 10 times the initial investment. Now, there's a few rules. First, the stock was issued by a domestic C corporation in an industry other than a hotel, restaurant, financial institution, real estate company, farm, mining company, or business related to law, engineering, or architecture. Number two, the stock was issued on or after August 10th, 1993 for money or property, basically meaning you paid to buy that stock. On the date of issue, the company has less than $50 million or less in assets, and there are no stock buybacks from the taxpayer for the 4 years prior to the issuance. Finally, the stock is held for at least 5 years prior to the sale. Now, if all of these are met, you can exclude up to the first $10 million of capital gains. So let's look at a real-life example. Let's say that you start a cannabis company, and you fund the company with 50 grand of your own cash, and in exchange you get company stock. You work hard at this company for over the next 5 years, and after cannabis gets rescheduled, and now is legalized, a private equity firm offers to give you an offer you can't refuse on your stock. You get an offer for $5 million for your stock for your share of the company. Now, luckily, when you started the company, you engaged with us to make sure everything was properly set up and documented. Now, if you met all the requirements for Section 1202, you would have saved yourself $1.178 million in taxes. It's crazy, right? What a great reminder of why to be proactive with the financials and the financial planning of your company, rather than do what most would do and be reactive. And there you have it, folks. Now you're equipped with the knowledge to save yourself a tremendous amount of taxes on the sale of your company. That said, it's always the details are what matters, and of course, you're going to want to see a tax or legal advisor to see how this could fit with your business, because everyone's situation is different. But remember, knowledge is only power when you put it into action. Now, if you found this video helpful, be sure to give it a thumbs up and subscribe to my channel for more amazing business content. And hit that notification bell so you'll never miss a beat. Now, until next time, dream big, aim high, and remember, the sky's the limit. This is Eric, signing off.